Now, we don't know how real this ceasefire is, how much is finesse, how much will be needed to be nailed down still. But we do know that oil just had its biggest one-day decline in 6 years. Coming back down to the mid-90s, a pretty darn good sign that the ceasefire has a real chance to survive. I think one of the great values of a day like today is a close scrutiny of the biggest gainers and losers in the session, because they give you a window to what can work when things are a little more calm, and more important, what can't work. Because if it didn't work today, on a day like today, it probably ain't going to work at all. First up, when I peruse the biggest gainers of the Dow, NASDAQ, the S&P, I see a mixture of interest rate sensitives, travel and leisure, and data center stocks. It's a little more eclectic than you might think. I mean, what? The biggest gainers in the Dow today? Sherwin-Williams, Caterpillar, Home Depot, Goldman Sachs. That's a pretty extraordinary set of leaders when you think about that. It's about a truce in Iran. When you see these four going up, it means investors believe that interest rates are coming down. By the way, they were coming down, and then they did go up near the end of the day. It's hard to fathom Sherwin-Williams being the winner from peace in the Middle East, isn't it? But hope springs eternal, as some might, thinking the housing market could be thawing. Now, this is the worst housing market when it comes to transaction volume in decades. The housing stocks itself, 44 years old. That's the average age of a house. But when you see that pent-up demand, you'd think that people would go to Home Depot to get paint, the natural order of things. They aren't. Home Depot hit a 2-year low just yesterday. It's been a terrible time for housing. Yet today the stock shot up more than 5%. The beginning of something new? I say you need a couple of persistent rate cuts before you can say that. Now, Caterpillar's different. Caterpillar's up there, and its presence is a reminder of how terrific this market can be. Cat represents infrastructure money, construction money, and data center money. It's been such a horse. All aboard! Because the company's got multiple ways to win. I think Caterpillar moved up to, the prospect of more infrastructure, perhaps worldwide more construction, because rates came down, at least for most of the session. And, of course, the data center, because you need Cat generators to back up the usual power sources. I think the data centers may actually have hidden opportunities. You can string Cat engines, maybe even thousands of them, and tie them together and then plug them directly into the natural gas patches we have all over the country and power data centers without raising electric rates. How about this Goldman Sachs? All right, there are multiple reasons to own this stock once you think the coast is clear. I know there's plenty of money there that could be destined for takeovers now. I think there'll be a rush of deals as this administration is incredibly pro-deal making. They never met a merger they didn't like, unless it involves the president's political enemies, that is. And it represents a lot of advisory business for the investment banks. Now, Goldman reports next week. I think it should be a good one, as we told members of the CNBC Investing Club. We've owned the stock for a long time.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.